Mortgage Rate Monday. Today's December 5th. Good to be back. Took about a month off. Been working on my basement down here. Got a new floor and new paint, all that good stuff. So excited to be back on a regular schedule now, and really excited to be done with this project. In complete honesty, let me share my screen real quick. Okay. All right, so here's where rates are today. I think the last video I did, we were up in the sevens for a 30-year fix, so we've made quite a good recovery. Everything else is in the high fives. I don't think that, all right, I should back up. Let's give context to some stuff that happened. There have been some policy changes that went on. The outlook is looking brighter, depending on what the Federal Reserve says. So that's why rates have been kind of going down. The economy has started to show signs of slowing, which is good for rates. So all of these things put together kind of lead to where we are now. There is a floor to how low things can go with a 5% federal funds rate, which is the rate that the Federal Reserve keeps raising. So really, realistically, at a 5% federal funds rate, rates can't really go too much lower than they are now. I mean, maybe mid fives at best. But I wouldn't expect, anything less than that, for, at least a year. But as far as like the near term, I think we'll be bouncing around, between 6 and 6.5 on 30-year fixed. And, all these other products down here, they're probably going to be bouncing around between, 5.5 and 6. But that's kind of where we're going to be, I would say, at least until the end of the first quarter next year. So around March. And then when summertime picks up, we'll kind of see where things go there. So that's really it for rates. Let's look at, I got another data point I want to show you here. So this is the market report for the Kansas City region from our MLS. This is from October. The November report, it probably won't come out till probably next week, but this is the best thing I have to work with. The three things that I want you to pay attention to are really right up here. You got combined or closed sales are down almost 24%. Supply is up almost 31%. And average sales price is up right around 10%. This number right here is the one that's been dropping, and understandably so. But so what that really means is, a $400,000 house in October of 2021 would be worth $440 today, roughly. So I think this number is going to continue to shrink. I wouldn't be surprised to see it around 5% when the November data comes out. And then by the end of the year, see it pretty close to zero, which is kind of what all of the financial experts say to expect, kind of flat growth next year. So, not going to make a ton of money, but not going to really lose money per se. But so that's really what you can expect moving forward. I'm trying to think of why I had Redfin up here. I know I had it up here for a reason. Oh yeah. So you can see here's the curve. This is just like actual Kansas City. So it's not super relevant to like the suburbs, but it's the best thing I got over here. So you see we're starting to trend down, which we've been pretty flat over the summers the past couple of years. But the one thing that was interesting was you see January here, there's a little floor. January here, there's another little floor. January back here, pretty low. It'll be interesting to see how low January goes here. Normally, December's a pretty good month, and then January and February dip off, and then March kind of jumps back up. So it's interesting to see how low we're actually going to go, because there's still a lot of unknowns. Like I said, I don't think we'll see 7% rates again. As always could be wrong, but I don't see a reason for it, because things are actually starting to show signs of slowing down. But I'll keep my eyes on this and keep you guys updated. Look forward to doing this more consistently again. So thank you guys for watching. I'll see you next week.